Good evening, everyone. Welcome to the channel. Today I am going to talk about Cgn New Energy interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Cgn New Energy Holdings Co., Limited, offers a diverse range of businesses and services, including electricity generation and supply steam generation and supply project development and operation in various energy sectors, plus wind power plus solar power plus gas-fired power plus coal-fired power plus oil-fired power plus hydroelectric power plus cogeneration, cogen, plus biomass energy plus energy storage plus fuel cell, projects construction and operation of power stations and associated facilities management services for power plants. Cgn New Energy's stock price has seen a significant increase of approximately 28.57% over the past year, driven by several key factors. A major contributor was the company's substantial solar module procurement in February 2025, indicating ongoing expansion and investment in its solar energy projects. Additionally, Cgn New Energy's share repurchase program announced in May 2025 has likely boosted investor confidence, signaling management's faith in the company's valuation. The broader growth of China's renewable energy sector, which saw significant investments in wind and solar capacity between 2021 and 2024, has also provided a positive backdrop for Cgn New Energy. Furthermore, increased green electricity trading in China, particularly in the first half of 2025, has driven demand for green energy among Chinese businesses. This trend benefits renewable energy producers like Cgn New Energy, contributing to its stock price growth. Overall, these factors have collectively contributed to Cgn New Energy's positive stock performance over the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. Revenue growth is primarily driven by the accelerated development of virtual power plants, increased regulation capacity, expanded application scenarios for virtual power plants, and encouragement of business innovation. Additionally, the rise in renewable energy use, natural gas power plants, and participation in hydrogen power generation bidding markets contribute to revenue growth. On the other hand, revenue decline is attributed to lowered tariffs and power generation from Korea projects, decrease in both power generation and sale of steam from a PRC cogen project upon disposal, and sales of electricity and other services. The market-oriented reform of new energy feed-in tariffs, electricity market transactions, and spot market price limits also impact revenue growth or decline. Geographically, China's power plants experience revenue growth, while Korea's power plants face a decline due to a 10% dividend withholding tax. Segment-wise, sales of electricity, tariff income, service income on sales of electricity, and sales of renewable energy certificates contribute to revenue growth or decline. The company's financial performance is a testament to its ability to generate significant operating cash flow. The data reveals a substantial increase in net cash generated from operating activities, rising from $261,516 in 2024 to $303,867 in 2025. This upward trend clearly indicates that the company is successfully managing its finances and generating positive operating cash flow, a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there are mixed signals. On one hand, non-current liabilities decreased by $247.1 million, indicating a reduction in long-term debt. However, total bank borrowings increased from US $4,926 million to US $5,108.5 million, showing an increase in short-term debt. Additionally, current liabilities rose by 21.1%, suggesting a potential liquidity issue. Regarding interest expenses, there is a clear trend of decrease. Interest expenses decreased by 12.3% from 2024 to 2025, as seen on pages 30 and 58. This reduction in interest expenses suggests that the company has managed its debt effectively, either through refinancing or reducing its borrowing costs. Overall, while the company's debt level is somewhat ambiguous, its interest expenses have decreased significantly, indicating a positive trend in managing its financial obligations. A performance overview of power plant segments. The financial performance of power plant segments in China and Korea has shown significant differences. In China, both page 55 and page 56 reports indicate strong revenue growth, with segment revenues reaching US $469,340 and $509,211 respectively. The segment results also show a healthy profit margin, with a result of $187,952 on page 56. In contrast, Korea's power plant segments have underperformed. Despite a higher revenue reported on page 55 at US $378,193, the subsequent report on page 56 shows a drastic decline to US $11,724 in revenue and an even lower segment result of $558. This indicates a significant downturn in performance for Korea's power plant segments. Management's commitment to sustainability and growth, the company remains dedicated to developing clean energy and prioritizing environmental protection in line with the nation's dual carbon target. Effective ESG governance is crucial for achieving this goal. In terms of strategy, management has outlined 7 key directions for focus in the second half of 2025. 1. Strengthening party building and leadership. 2. Prioritizing safety and establishing a solid defense baseline. 3. Implementing deepened reform to stimulate internal motivation. 4. Driving innovation to achieve differentiated advantages. These initiatives demonstrate the company's commitment to sustainable growth and development, while also emphasizing the importance of operational efficiency and innovation. The company has a history of paying dividends to its equity shareholders. In 2024, it paid $66,921, and in 2025, it paid $62,005. This demonstrates the company's commitment to returning value to its investors through dividend payments. That concludes the financial summary for Cgn New Energy. Feel free to comment below, and I will be happy to answer them when possible.